Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Mathew, and with me is Smriti Chaudhary, and we will take you through the next half an hour or so of trade. Happy Friday to you, by the way. And let's take a look at where the markets are. It's a little bit of a breather that the markets are taking, and this is more or less what is playing out across risk assets across the board. You had the US equity markets that saw just a little bit of selling, particularly for the S&P 500 as well as for the NASDAQ. And you had, for example, a cooling off in NVIDIA, which is, has been on a tear. And you also have a little bit of selling in the Asian markets. So this is par for the course. The broader markets are continuing to do well though, but the gains are narrow. You have the Nifty Mid-Cap 150 index that's up about 0.2% or so, and you have the Small Cap index that's up about 1/3% or thereabouts. Now let's talk about the sectoral gainers, because this is going to give you a bit of a perspective as to what things are moving in trade today, and it's almost an even set of gainers as well as losers. Right on top of the screen, you have media as well as IT that are gaining ground, and IT we'll talk about in more detail. It's up about 1.5% or so. Pharma is up about 0.7%. Metal is up about 0.5% or thereabouts. Among the losers, you have the PSU banking pack as well as the Nifty Bank that is losing ground. Remember, earlier in the week, this is the pack that was doing incredibly well. But there's a reason why the IT pack as a whole is doing well, and this is on the back of Accenture and the guidance that it has provided overnight. And this is not as negative as we had thought it was at the start of the day today. In fact, it is a narrowing of the guidance, or the narrowing of the revenue guidance for the current financial year. We've got Rucha joining in to give you some perspective on why this is not as bad as it initially looked. Rucha, can you put this into perspective for us?
Yes, thank you. So Accenture reported its results overnight, but there are just two takes from Accenture for the Indian IT companies. Number one is the guidance. So Accenture has narrowed its guidance to 1.5 to 2.5%. Now this implies a slower ramp up in the deal wins, and while the clients are also still preferring the cost takeout deals. Now this indicates that there is still pressures on the budget for the clients. Also, the management mentioned that the discretionary spend are still under pressure. Now this is what we have been hearing from the Indian IT companies as well over the last few quarters. Next is the managed services booking. Now this is the segment which is relevant for the Indian IT companies, and this is what we look at from the Indian IT companies perspective. Now this segment reported its highest ever bookings and was up around 40% on a year-on-year basis. Now this gives investors a ray of hope for, say, a stable demand, if not an uptick in demand, because as I mentioned, that the management still stated that the discretionary spends are under pressure. Next is talking about the sectoral performance. The financial services sector for Accenture was weak during the quarter. Now, Indian IT companies have a large part of its revenue coming from this sector, and weakness in this sector also indicates caution for IT companies in India. Next, talking about generative AI. Now, Accenture reported over 900 million of new bookings in generative AI, but also mentioned that this is still under process. Even the large IT companies like TCS and Infosys did mention about generative AI, but I think there's no pertinent revenue that is coming from the Gen AI deals. While lastly, the stock price of Accenture was up around 7% in yesterday's trade, but this was largely due to factors which are not relevant for Indian IT companies. Now, for example, the consulting revenue was also up, and Accenture is seeing good traction in this segment, but again, this is not relevant for our companies. And also the Japan segment was good for Accenture, again, which is irrelevant for Indian IT companies. So all in all, the weak guidance indicates still pressure on discretionary spend still prevails.
So much, Rucha, for that. And on that note, let me introduce you to the guests for today. We have Sunny Agarwal, Head Fundamental Equity Research at SBI Cap Securities, and Rajat Bose as the technical guests for today. Sunny, I'm going to come to you straight on the IT index. You're seeing all these IT stocks jump today in trade, even though Accenture has actually narrowed its guidance, and there's still going to be pressure on the discretionary spends, as Rucha also mentioned. Now, going forward, do you see that this sort of changing, and this is the right time to buy IT to play the long-term game?
Good morning. So basically, what I feel the what Street is reading from the Accenture guidance is that the lower end of the band has been revenue growth. The band has been revised from 1% to 1.5%. That is where Street is taking a positive read through in the Accenture result. And we all know that Indian IT company has been alluding to this fact that discretionary spend has remained under pressure. But one has to keep in mind that so the clients of domestic IT companies, they have already budgeted for an IT spend. It is only the matter of time when they will start spending on discretionary items. So maybe the street is hopeful that second half of fiscal year 25 is the year where we may see ramp up in a discretionary spend by a global consumer across the BFSI, healthcare, and a new emerging sector. In terms of price point, definitely in terms of valuation, large cap IT companies are trading at a favorable risk to reward ratio. The only matter is when will we start seeing a decent double-digit earning growth, whether it is the second half FY25 or it is FY26, that is to be looked upon. Coming to the investment, I think right now IT sector can be approached through SIP route rather than deploying or blocking entire capital at one go. So companies like SCL Tech, Infosys can be accumulated over the period of next 2 to 3 months. And anyway, IT companies will be posting their numbers in the next 20-25 days, right? So we will get to hear the fresh commentary from management regarding the demand environment in the upcoming result season also. So maybe gradual accumulation is the right strategy as far as IT sector is concerned. If somebody is a medium to long term investor.
Morning, Sunny. Alex joining in as well. This is so incidentally a question coming in from the first viewer who's asked a question today, and that's Mukesh. He's asking about Tata Consultancy Services, which is not one of the stocks that you mentioned that you prefer. You mentioned HCL Tech, but he's bought already. He's got 100 shares that he's bought since 2022 at an average price of 3,700. So he's in the green right now. He can hold for the long term. Should he continue to do so, or should he keep adding, as you've suggested, for the other stocks?
Yeah, hi Alex. Definitely one of the largest player as far as IT and domestic IT sector is concerned. I think TCS should be the part of our portfolio, and if somebody has got an additional capital to deploy, he can gradually increase his exposure to TCS or any other large cap IT companies like Infosys or SCL Tech for that matter, if somebody want to diversify within the IT basket also.
All right. Next query is from Kanak Chaudhary, who's writing in from Ahmedabad. The question is on Ramco Industries. They bought shares at a price of 226 rupees. Rajat, coming to you on this one, would you suggest holding the counter? It's currently trading at around 247, so slightly higher, a bit of profit there. Would you suggest booking those profits or wait for a little bit?
If you look at the YTD chart, and that is the year-to-date chart, it is actually range-bound. Range-bound between, say, 260 and roughly 200 on the downside. Currently, it is at 247, and it is showing some weakness. But unless it falls below, say, 230, it is not going to be that weak. So it depends that since there is no trend as such, whether you exit or you would hold is completely up to the investor. As such, if you hold it for longer term, only when 260 to 270 resistance zone is taken out, then there will be some kind of an up move. And any fall below 229 would make it quite weak.
All right. We've got Satya asking the next question. He's just booked profit, Sunny, in Westlife Developers. He says he gained about 15% or thereabouts. I do not know what he invested or how much he invested, but he's looking to deploy the funds that he has gotten from a perspective of the next 1 to 2 years with a potential upside of 25%. Any stocks that you think fit the bill?
I think one of the stocks which we are recommending to our client is Texmaco Rail. So basically play on railway wagon sector. So what we have seen, the entire railway wagon sector has seen a massive order inflow during the last 8 to 12 months. And we expect the execution to pick up over the next 4 to 8 quarters, and hence earning is likely to ramp up significantly. In addition to that, the pipeline for railway wagon bidding is pretty robust, so we expect Texmaco Rail to further win the new orders for wagon as far as wagons are concerned. So Techmaco really is the one stock where if somebody is looking for a 1 to 2 year investment horizon, can deploy his or her capital.
All right. The next question is from Janobi, who's writing in from Bangalore. These are two counters, Rajat. One is Garden Reach that they bought at a price of 1,373 rupees. Clearly in profit there, and the other one is Suntec that they bought at a price of 533 rupees. The question is, should you keep holding on to these counters? Now we have seen these counters, especially the defense counters, run up quite a bit. Garden Reach under a bit of pressure today, but would you suggest booking profits at this juncture?
Technically speaking, I would say that a lot of people are interested in defense stocks. So maybe after some time, even Garden Reach will also attract some buying. But recently, I did a study of about 20 defense stocks, and I have found that most of the stocks have gone up in a parabolic manner. When stocks move up in a parabolic manner, at some point in time, there would be a major correction, and that correction could be pretty long-lasting. So if one is not greedy, I would suggest you book profits. Otherwise, you hold on to Garden Reach and put a stop below 1450. And the other stock is Suntec Realty. Smriti?
Yes, it's Suntec Realty.
Well, regarding Suntec Realty, the chart formation is again somewhat similar. In this case, I would say that no, you should not be exiting right now, but put a stop loss below 550 and continue to hold, because Suntec might still give some more upside.
Okay, I'm coming back to you on this next one, and this is on Avantel. The shares were bought at levels of 113, I believe. Let's try and pull up the chart a little quicker so that I can look at the price. We're talking about Avantel. The stock is currently trading at 178. It was bought at 113 or thereabouts. Sushila from Bellary is asking about this, asking whether or not she should consider an exit. What level would you suggest an exit at, Rajat?
It is Avantel, right?
That's right.
Well, Avantel, I would suggest getting out right now. I would suggest that at 176, see, 5 trading sessions back, it was around 120. And now it is 176. You're getting a 50% in 4 days. So if I were in the investor's shoes, I would have definitely booked profit here.
Coming back to you, Rajat, the next counter is Avanti Feeds. This one's from Ujjwal. They say they bought the shares at a price of 562 rupees. It's currently trading above 600 rupees. Would you suggest booking profits or keep holding on to it? It's given about 40% in returns in the last 6 months.
See, regarding this, I would say qualified sell call. If it were to fall below 575, then it becomes really weak. Then one should seek an exit. Otherwise, if it fails to take out 675 in the short run, then also one can get out of it, but not at current levels of 625.
Okay. I'm coming to you, Sunny, on the fundamentals of Union Bank of India. We've got Shivanand, who's asking about this. He's bought 5,700 shares at levels of 95. If we can pull up Union Bank of India very quickly and look at where the charts are right now. In fact, it is at 145. He's bought this 1.5 years back, Sunny. Should he hold on based on the fundamentals?
Yeah, I think, first of all, congratulations to Shivanand for a very excellent gain during the last 2 years. What I feel is that PSU Bank still has some steam left in terms of valuation catch-up, and one can continue to hold. In fact, one can adopt a strategy of partial profit booking also. So out of whatever number of shares Shivanand is holding, 50% can be offloaded and shifted to a private bank like Axis Bank or IndusInd Bank, where the relative upside looks much better as compared to the PSU Bank. And within PSU Bank, Union Bank can also deliver a healthy return provided the June quarter numbers are robust. So we need to wait and watch for the June quarter number. Anyway, the growth guidance which we are seeing from the entire PSU bank category is 10 to 12% in terms of credit growth for FY25, which is slightly at a lower end as compared to the private peers at 14 to 15%. So partial profit booking is advisable in Union Bank, and that can be shifted to a private bank like Axis or IndusInd.
All right, fair point. It's time to slip into a short break, but we'll be back and we'll take more questions on the other side. Stay tuned. Welcome back. You're tuned into Ask Profit. Let's dive back into the queries. The next one is Gabriel India. Rajat, this one's for you. The question is from Rajesh, who's writing in from Bangalore. The question is, would you suggest buying at this juncture something like a Gabriel India, which is up about 1.5% right now and has done decently well, actually very well in the last 1 year. It's a multi-bagger. Would you suggest buying at this juncture?
Gabriel India is actually just about testing its earlier high posted in 2023. 2023, the high was 443.95 and it happened around December 23. And now again, it is coming close to that. Now what we need to see whether Gabriel India manages to get past 450. If it fails to do so, then definitely one should book profits. Otherwise, one can continue. But chances are because there are negative divergence on the weekly charts and the moving averages are too far off on the downside. So there would be a retracement. So at current levels, if one decides to book profits, that would be pretty fine. Otherwise, wait to see if it crosses 450. In that case, hold on, else book profits.
All right, the next one is on Bombay Burma. And Krishna is asking about this. I'm coming back to you on this one. Bombay Burma is not something that we speak about. So I think we pulled up the wrong one. So Bombay Burma is what we're talking about. Yeah. For a perspective of 1 to 3 months. Rajat, this one's for you. It's not a stock we speak about every day, but it's incidentally up about 4.5% as we speak. Would you buy it right now for the next 1 to 3 months?
See, again, it is the same situation that I can see out here in Bombay Burma. Bombay Burma posted a high of 1,840 last year in the month in this year itself, in the month of February. And now again, it is on a retracement mode that is trying to get past that level. But already supply is coming, but yet since the 9-week moving average is going up, I would say put a stop loss below 1,600 on closing price basis and continue to hold on. Chances are that you might see somewhere between 1,700 and 1,800.
All right. The next counter is Cochin Shipyard. Sunny, coming to you on this one, would you suggest, while we don't know the time horizon, but let's assume it's from a longer term perspective, Vishnu Vardhan is writing to us. Would you suggest buying something like a Cochin Shipyard where we have seen a massive rally in counters like this?
You are right. You have rightly pointed out that all the shipping companies have seen a massive rally during the last 15-20 days. And it is advisable that at a current juncture, valuation has turned slightly expensive. Let us wait for a further deep in the counter and then can be added in a long-term portfolio. However, one has to keep in mind that kind of return which all these shipping companies have generated during the last 6 to 12 months, the same can't be replicated for the next 12 months. So the return expectation has to be fair, henceforth maybe 15 to 20% kind of return. That too, if you do a proper staggered buying on the deep. So at the current juncture, it is not advisable to add. Let us wait for the stock to consolidate. Let us wait for some pullback and then can be added in a long-term portfolio.
All right. Anand's got this next question. I'm not sure if you have coverage on this, Sunny, but this is Beta Drugs that we're talking about. He's bought at levels of 1,070 and he's got 600 shares. He's wondering what the outlook is on this company that is involved in oncology, I believe, oncology medicine, right?
So I was just going through the numbers. I think it's a small cap company, 1,100, 1,200 crore market cap, quarterly profit of 15 to 17 crore. So that gives us annual profitability number of 60 to 70 crore. Seems to be a decent company, but again, a very smaller scale in terms of pharma. So I think one can stay remain invested in Beta Drugs. Seeing the company's profitability has ramped up significantly during the last 2 quarters. So would advise to stay remain invested in the company.
So fair point, but can I follow that up since you haven't looked very closely at the stock? What do you like in a similar play if you're talking about the pharma stocks? Is there anything that you consider valuable or that has a good buy price right now?
So I think one of the counter company which we like in terms of valuation also is Natco Pharma. So Natco Pharma, we have seen a very decent uptrend in the earning growth, trading at a reasonable valuation, less than 15 times price to earning multiple. So Natco is the one stock which we are recommending to our clients from a mid-cap basket. And Shilpa Medicare, again, the company has got a very robust growth plan over the next 2 to 3 years. A unique product which are likely to get commercialized over the next quarter or two. So Shilpa Medicare is another counter which we are recommending to our clients from Medicare.
All right. The next counter is Mahindra & Mahindra. This one's from Naman. The question is, should you buy? And this from a very long-term perspective, Sunny, for 15 to 20 years is the time horizon here.
Yeah, so it's good to hear that somebody want to invest for 15 to 20 years, and it's a no-brainer. The kind of traction which Mahindra and Mahindra is getting on the utility vehicle portfolio, and at the same time, there are many value unlocking levers like electric vehicle demerger and listing. At the same time, many loss-making businesses have been curtailed, and many emerging gems we will see coming out of the fold of M&M. So definitely one can add for long term from a long term perspective in the portfolio.
All right, BEL is the next counter that we're talking about. We've got a viewer, Asit Gupta from Delhi, who's bought at levels of 288, so he's in the green right now. What is the short-term perspective on this one? Would you book profit or continue to hold, Rajat?
Hey, Alex, I would suggest booking profits because the exit poll day high, that is perhaps the all-time high, that was at 323, and now it has tried to get past over the last 4 sessions. It has been attempting to get past that, but now the charts are suggesting that probably there would be a downturn where it would fall below 290, or even it might test levels of around 270 to 280. So I would suggest one should exit at current levels and don't wait for further fall, because in that case there could be accentuated selling pressure coming in here. This is one of the defense stocks, so it has also had a parabolic run.
Yeah.
And any parabolic run stock, when they correct, they will correct quite substantially, and the correction will continue for a long period of time.
That's interesting. In fact, you had mentioned that word previously on the show as well, parabolic. Let's use that as a word of caution. Sunny, thanks so much for joining in. Rajat, you as well. Thanks so much for all the advice that you have dispensed, and hopefully this has benefited not just those who have asked the question, but everybody else tuning in as well. And that brings us to the end of this particular edition of Ask Profit. Thank you so much for tuning in. From Smriti and myself and the team that put this show together, thank you so much for watching. This is NDTV Profit.
Welcome to the special show. I'm Tamanna Inamdar. We're talking about the GST Council meet. Now, will the 53rd GST Council meet this Saturday make big changes or maintain the status quo? All eyes are on this key meet of state finance ministers for a couple of reasons. One, it is the first meet in over 8 months. And secondly, it's the first meeting after the recently concluded Lok Sabha elections, where the ruling BJP now has TDP that won the state of Andhra Pradesh as a coalition partner. The BJP has also won in the Odisha state elections. So does that mean Finance Minister Nirmala Sitharaman, who heads this Council of State Finance Ministers, will have more support to push through important changes and decisions in the GST meet? What could some of those decisions be? For one, the rationalization of rates becomes very important. Secondly, what happens to compensation cess post 2026? But there's a lot more that is in focus as well. What we're going to try and do today on this show is get a realistic picture, separate fact from fiction, because you're probably seeing a lot of reports that there could be something done in online gaming, in fertilizers, in aerated beverage cans. In fact, there's a whole host of stories. But what is actually likely? That's what we're discussing. So to do this, I'm talking with Prashant Agarwal. He's partner at PwC India. Abhishek Rastogi joins us, founder of Rastogi Chambers, and L. Badri Narayanan, executive partner at Lakshmi Kumaran and Sridharan. Welcome to all of you, and thank you so much for joining us on NDTV Profit. Badri, I'm going to start with you. And, just since we're trying to set context over here, I want to start with what's realistic. We have seen fertilizer stocks go up, gas stocks go up, or some online gaming stocks respond in the markets on the expectations that these big changes which are pending will all be taken up in the first council meet. So first question to you, is that even likely, or is this going to be more of a meet and greet, let's get things started kind of a session?
So my own sense is that this is the first GST Council meeting after this historic election, where the BJP has come to power for the third time, but of course with a coalition partner in TDP and others. So I think the important thing would be to set the stage for the next 3 years, 5 years for reforms. My expectation to start with would be that, before the elections itself, there were certain agenda items to be taken up. There was a lot of talk about rationalization of rates, but I still believe that the Fitment Committee for Rate is yet to provide all the information back to the GST Council. I think the budget is going to be coming up next month. I think the focus initially, at least in this GST Council meeting, would be to make certain key amendments that need to be made in the GST Act for the purpose of being able to operationalize certain things. For example, if they want to provide certain waivers for retrospective issues that are there for the past period, for example, online gaming, those will require certain powers to be provided to the executive to issue these waiver notifications. So I think one of the big agenda items there is an expectation is the GST Council to consider and put in place. And this is something which is affecting not only, say, the online gaming, but other industries also, where there's a difference of view between how the industry was undertaking certain practices and with respect to how, for example, the department is looking at the taxation. I think there are some other more key issues, for example, things like anti-profiteering adjudication, where the law committee has already made certain recommendations. Those are probably going to have an impact. But my expectation is that probably we should not expect too much from this first GST Council meeting. It's probably going to set the stage for some more reforms to come going forward. There will be some discussion on rates, maybe some discussions on amendments, and some streamlining of processes for the purpose of taking it forward. So those are my expectations at this stage.
Yeah, no, absolutely. And that was excellent, to set the stage for what's happening, because the number of expectations have just gone through the roof. So I'm going to come to some of them specifically. Abhishek Rastogi, do you think it is feasible? Let me come to the big one, gas. And this is also because the minister, after taking office, said that we're going to attempt in this term to bring taxation on gas under the ambit of the GST. Now, that's seen as low-hanging fruit as opposed to, say, trying to bring petrol and diesel under the ambit of GST. Do you think it's feasible? Do you think if at all there is a conversation, it starts in this meeting?
I think certainly this agenda item is on the cards, and I think this is a good beginning to start with, because if you get one of these products under the GST gamut, it helps the industry, and it also helps in a way to curb inflation in some way or the other. So I think the moot point today is that we are looking in the right direction. And when we are talking about the controversial issues to be addressed, I think we also know for a fact, with the new government coming into play now, the support is expected from some allies and partners as well, as far as these issues are concerned. But at the same time, there could be certain state-specific issues which will have to be seen, that how the government approaches that, how the GST Council and the Finance Minister approaches that. Because some of these issues may be very, very positive for key states, but may not be very relevant for some states. So I think the pragmatic solution will have to work here. The more balanced approach will come here. I think this announcement with respect to gas is a welcome move, because we also feel that, most of these products must come under the GST regime. How it will happen?
Abhishek, one minute. Abhishek, there is no announcement yet on gas, which is a welcome move. We are asking whether they'll even talk about it. Do you really think they'll take it up in this meeting? Because would all states want to give up, their revenues, whichever they're getting from gas right now?